Hey guys, what's up? Welcome to another video. Fumble the bag right there. All right, so what you guys can see on the screen, it's Bitcoin. So on Bitcoin today, I called it on the group. I was like, we're looking for bearish fair value gaps, and we're looking for 24,250, 24,250. Okay. Now let me explain the framework, and then let's basically do a review on price action on gold. Okay. Now on Bitcoin right now, what can we see? Here's what we can see. Okay, price has been going down. All right, and there is a break in market structure right here. Okay, so if there's a break in market structure right over here, we are expecting price to go into premium of this range, goes there, we react from it, and from there we're looking for lower prices, obviously. Okay, now what prompted me to take this sell? What prompted me to take this sell? Okay, can you guys see this wick right here? Okay, this wick, yeah, that is a gap. The entire damn thing right here is a gap. Okay, now yes, price broke down, went above it. Now see how it goes down here on this time frame, and it doesn't really close below this gap, right? So can I really use it for an old area of reaccumulation? I cannot. So here's what I'm going to do. I'm going to go to the 5-minute chart. And on the 5-minute chart, if I look closely, look here. If I look at this right here, what can I see? I can see that I can now refine it to this. Okay, but on the left side right here, is there any other area of reaccumulation that I can use, that I can really use? Well, I see this gap here. I can use that. I can use this. So basically, I can use this entire thing. But then the question remains, which one am I going to use? That's the biggest question. That's the biggest question. Which one am I going to use? Okay, I'm not going to use any of these because at the end of the day, we went down to this guy. Okay, but I still require to see a price closure below the gap. Okay, what about this? Nope. I'm going to go to the 3-minute chart. Now on a 3-minute chart, it still did not close below. Oh my God, right? Okay, let's go to the 2-minute chart. What about on the 2-minute chart? On the 2-minute chart also it didn't close below. Now I'm trying to over refine things, right? There's no need to do that. Okay, here's the trick. Price did not close below, but now when price went back up there, remember around here I was saying, okay guys, look for bearish fair value gaps. There it is. Then over here I sold. Okay, in order for me to use this gap, this old gap in terms of a wick, yeah, I want to see price close below it. Okay, price goes down, goes up, finally closes down below it. Now I can refer to this gap and I can go ahead and take another sell from it. Okay, now we should be able to see price try and go make its way down. Okay, now given our protocols for when I call these moves out, we are looking for basically a 50 to a 100 point move, right? So let's go down here from here. Okay, that's 50. That's 50 points. You might say, Sean, no, come on, man. Anyone can call those moves out. Okay, fine. It's a scalp. Like it's a scalp. I'm not calling intraday expansions because I don't want to. That benefit is for the private group. Okay, so you could go to one minute chart, have a stop loss here, like that, 50 points, full take profit 100 points. Oh, gave you that as well. Okay, so that was for you. Now what's this? This is a potential intraday expansion. Okay, if it takes too long, cut the trade, go long. All right, okay, so that's what I want to talk about. So this is the Bitcoin framework that I was talking about. Now, a majority of the time, this is the type of setup that I'll call out in the public group. I'm going to limit it to like 1 per day. Okay, so take advantage of it while you can. Yeah, and you can share the Telegram journal group around your friends. Whoever's new, if you want to come and check it out, you can come and check it out. If you want to follow the signal, I don't like to call it signals, right? If you want to follow them, then go ahead at your own risk. Yeah, so you do you. Okay, so now before we move on, I'm going to take your attention to gold. Okay, now on gold, here's what we can see, right? Remember, I think it was the previous week, last week, I think, I was talking about the gold, what? Sell from here. Remember? That. Remember we were looking at this, right? And look how far it came. Yeah, this was our initial target, 1825. Remember, 1825 was our first target. Second target is what, 1808 down here. It should make its way down there. I would like to say next week, but if not next week, then the week after that. Okay. See how it dropped all the way down using this previous area of reaccumulation. But how do I know it's reaccumulation? Simple. Go to the 4-hour chart, mark out that same gap. See this, how it jabs into the gap and runs away? This is an area of old reaccumulation. Sell from there. Okay. All right. So apart from that, here, what do we have? See, note how we have this gap here. And look at how the bodies of the candles did not really close below it. So the moment we did close below it, right there, the high, the midpoint, and the low becomes an area in which we can use to go short from. No need to expect price to go all the way up there. Okay. So now we win. Cool. What's next? Here's what's next. With the 1-hour chart. Okay. This, I believe this was CPI, if I'm not mistaken. Yeah, 14th of February, CPI. Okay, what CPI did. Okay. Utter bullshit. And it still went low. Okay. This formed the high of the day for that day and then started dropping lower. Okay. Here you can see how price referred to that same old gap. Okay, refer to that same old gap because it's CPI. This is why we stay away from CPI. Wait 5 to 10 minutes after CPI, then go for it. Okay, because if you look at price now, look carefully. If you go here, yeah, so right there, into the 15-minute chart. Actually, not the 15-minute. Let's go to the 5. Okay, all of this price action. Look at all this price action. Okay, see how we have this gap here. See how price created an up close candle over there. That was some 1 minute to 30-second chart reaccumulation to go up, and then it failed. We could say the same for this. Okay, so these are areas of price you want to see price heading into to sell from. Okay, look at that reaction over there and how it went lower. Okay, then we're heading into what, 12 p.m. EST, so that's lunch hour. And look at how it references this one. We're looking to see shorts from here. Okay, now from here, if I just jump to the 1-hour chart to make things quick, play this forward. Look at that. See this? It utilized the low and the 50. Okay, there was no liquidity, so this was engineered liquidity. Price takes it out, then sells off. Okay, so there are ways of understanding liquidity. That's of course something I'm not gonna cover in public. It's bootcamp material. Okay, so you all had a chance, but now you all don't. I'm joking. All right, so we have that. Okay, from there, if I just, okay, let's just play it from here. From here, we drop Tuesday, Wednesday here. Price is consolidating. Okay, goes out of the consolidation. Okay, now see here. Now, this price action right here. Okay, if you head back to the 15-minute chart, see this right there. Okay, observe. See this old gap. We want to see whether price can sustain lower prices from there. No. So you see how it rejects, fails. Okay. Upon failing, when you see this high getting taken out, that's major liquidity right there. What about this guy? This is also major liquidity. So from there, let me draw it for you. So from here, You're looking for a nice reaction. There you go. Okay. Upon seeing that, you can now see how we had this gap over here, this very small gap. Price reacts from it. Okay. I want to see, can I get in short over here? Let's go to the 5-minute chart. Okay. Can I use anything from the 5-minute chart? I cannot. 3-minute chart. Okay. On the 3-minute chart, here's what I can use. And on the off chance it goes all the way back up there, that's what I can use over here. There we go. Okay, we identify the old area of reaccumulation, pair that with current areas of possible redistribution, and boom, shakalaka. Fair value gap associated with an old area of reaccumulation to the upside. Okay, from here, we're looking for lower prices. Now, keep in mind, all of these lows, right? Not this one. Actually, yes, this one. Right here. Look at this guy right here. Is what? This guy right here is extremely, extremely, extremely sensitive. Same goes, okay, this guy is already done. This one here, sensitive and sensitive. Okay, so when the time is right, once price takes out these lows, it should give us a reaction. This low gone, this low gone, this low gone. Look at that reaction. Okay, after this reaction, we are looking to just play the daily bias, which is to the downside. Okay, it slows down. Daily bias, it slows down. Towards the end of NY session, it goes up. Okay, it's okay because it's sensitive. Okay, from here, if we take all of these out, this high right there, this one, extremely, extremely sensitive, super sensitive. Okay. So looking for shorting opportunities around this high when the opportunity presents itself. Okay, there you go. Okay, go to the low time frame, find your areas of reaccumulation and use that for areas of redistribution. Okay, all right, and look at how it goes lower. Okay, if we head to the 5-minute chart, can you find these levels? All right, let's see. Here, see how price closed down, went ahead around that level, started selling off. Okay, here, we closed below it, went back to the 50, sold off. This, see how we jabbed into this gap, creating what? An area of reaccumulation. We trade down here. You're looking to see whether price can jab back into it and sell off. Not really. So we didn't get that. Why? We have this. So you look at every possible scenario right there. Goes into that and then sells off. And then from here, you're looking for price to just easily go below this low and head to around 1825 as our initial target. Okay, that's our initial target. So watch. Done. Okay, not really. We're looking for lower prices still. And there we go. Okay, there we go. All the way down. Okay, now look at all this extended price action right here. Everything's extended, right? Okay, now if you all are familiar with the manipulated ranges theory, that's mine. Draw this over there. Holy shit, what's this? Hold up. Yeah, here we know that this is true premium. Okay, so inside this premium, there's going to be a very specific liquidity pool that price can actually, reverse from, even if it's a retracement. Okay, even if it is just the goddamn retracement. What is it? This one. That means from here, we are looking for price to be drawn up all the way here. Watch. You go down, that's no issue. This is where we're looking for, this is where we're actually looking for trades from to go long. Okay, we broke down order block. The moment we trade above this area of what redistribution, we are going to go long inside of this box. There. Okay, so for instance, you're going to go long. The moment it taps back down here, your stops are going to be below this swing low or below this swing low, whichever you choose. And your target is going to be this. Okay, that's going to be your target. I'm seeing that, okay, I'm facing some type of drawdown. Now, if I'm facing some type of drawdown like this, I know, okay, this low, there could be a problem associated with this low. Not really, but there could be. So what I'm going to do is I'm going to do this. I'm going to move it just below this candle slow, right there. Okay, because I want to see instant movement. I don't want to see choppiness. Okay, all right. Now look at this. I got my reaction. We broke higher. Okay. You see this candle right here, how we broke up, came down, mitigation runs up. This, if price is stalling up over here, it should tackle this and go up. Okay, so you will then go long somewhere here, stops below this swing low right there or right here. And your easiest target, the easiest target you're going to choose is this. Now, why? Now, listen carefully. Why did I actually choose this low? How do I know that? Okay, this is the low that's going to get induced. How do I know that? Simple. If you use my manipulated ranges concept, look at this here. This high took out what high? This one. From here to here. This 50 right there, that's my fair value. So what's the closest liquidity pool to fair value in discount? This one. Okay. From there, we're looking for higher prices. Did we hit it? Almost. So I would consider that a hit actually. Yeah. We could go up there next week, probably, and then look for a spike down. That's what I'm looking for. Okay. Right, guys. So that's pretty much it. So let's head back to Bitcoin and just check out what Bitcoin is doing. Yeah. So Bitcoin, slow price action. Remember, you're looking for immediate movement. I'll probably close this, but yeah, that's a framework. That's gold. That's Bitcoin. And I'll see you guys in the next one. Good luck and good trading. Bye-bye.